All right. Looks like we're good to go. I apologize for a couple people I think have been sitting there waiting for us to kick off. Brief delay, but we're good to go now. Um, Interesting week. Last week's commentary looks a little prescient. As I said, hey, we're coming off the 4th of July long weekend. It's going to be low volume, chop, and I think that's what we got. Overall, I want to say that the high level consolidation continues. Two-way trading, I'm emphasizing. We're going to talk about a changing character with the dollar index and what should have been a hell of a trade for me with crude, but I looked at it and watched it and didn't pull the trigger, which that's a mistake. I got to do that. We'll talk about that in just a moment. Again, we've been looking at this. This is the April rip, essentially, as things started to calm down in Iran. Everyone saw how it's going to play out. We ripped basically until the beginning of June. And now we're just consolidating for a little while and digesting. You can see we bounced around. Let's go. Where are we here? So this is the 5th. This is our week. This was the end of last week. We dumped at the open and rallied and took it back, pushed a little higher. Assuming that, the resumption of some hostilities and things I saw over the weekend, it wouldn't at all surprise me to see like another move like this. But we're just chopping, and this overall looks really healthy to me. NASDAQ looks very similar, a little choppier. Regular viewers know I've been talking about the 50-day MA for a little while, and playing in here. These resistance levels and support levels. Let me go back right here. This is 73.50. As you can see, it's all important. We pushed through for just a little bit, but couldn't follow through. And as soon as people figured that out, we ripped way back. Another test here. There's higher support here at about 74.10. That's held as well, but 73.50 has become a really very important level. You can see up in here, we're testing some small resistance that showed up a few times right here. If so inclined, this might have been a nice fade Friday. It looks like it'll come in. If we get a chance at the open, I might be inclined to doing that with the news, but I think we're probably going to gap down a decent amount, and that's a much harder trade. But my areas of interest are right here around 74.10. Certainly around 73.50, slight interest in here, 74.80, go down, test this. And then I am, as I say, two-way trading. That's what brought me back here. I'd be looking to fade moves up here. I don't think, until we see something that's going to break us out, I think we're still chopping sideways for a while. And that's how I am trading it. NASDAQ as well, nice, clear, clean, well-tested level. Tested here. I should pull this line back to here, 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 here. Even here, push through it a little bit here. There's a lot right here at this 30,000 like 50 level, and you can see as well a lot of support pushes down. But this is just some very clear levels to trade here that you can trade against. Good opportunities. Small caps still look great. They haven't had the beta and haven't had that large move, but they look very healthy. We're going to look at a couple other components and that suggest the overall market is pretty healthy in a moment too, but small caps look good. We need to spend a moment here because for the better part of a year, I've been focused on this wedge in between these two lines with the expectation that we were going to break down. I said it's like there's no action until we break down, and that's been a good trade as we just trade this sideways. This is starting to look like a change in character. Again, this is a long-term chart. This is a year and a half. So this is not an immaterial change as we're holding over support. And I've been trading gold, not recently, but like to trade gold when the dollar gets weak. I don't know if the gold might be shortable on this holding above this level. If we start to follow through, gold will get stung. And we'll talk about the gold chart in just a moment. Treasuries, not going to spend much time here. I haven't for a while. Just consolidating in a pretty tight range. I mostly comment on how different the ranges are over the past, since Trump took over. It really seems like the range has diminished a lot, and we can consider why that might be. Yield, same thing. Don't need to spend a lot of time there. Overall view, this is just where I sum up the front half and, to put all this context together. And what's my bias is, buy the dips. It is two-way trading as we consolidate, but overall, this is a very bullish, constructive consolidation. If we start to break out, yeah, you can trade that. That's not how I'm trading at the moment. As I say, two-way trading. Sell high, buy low, and move in between. And I'm not forcing anything in the middle. My trading frequency is way down over this time period. So, and it's good. It's working out for me. Likewise, choppy range trading and holding key support levels. I just highlighted them on the 30-minute chart. Looks the same, but this is what you get: a big move up and just consolidate at the highs. There's demand there for stocks. I don't know if this is going to become a regular feature or not, but top-down charts, they do this. I read it most weeks. This shows the percentage of U.S. households in net worth is in which asset. Historically, people own their own homes, and that's the biggest source of wealth creation. Equities is now exceeding real estate exposure for, what is a very rare occurrence. And equities, when you compare, percentage of household net worth in equities versus previous peaks, we're well exceeding these peaks. Just interesting to note, again, this is a long time. This has been the case for several years. I don't think this is tradable, but I just like to understand the backdrop. And I clicked forward to show you these charts. It's good information to have in the back of your head, but it says nothing about timing. This is a different chart that says the same thing, that basically everyone's bullish. How much people are allocated to cash? Okay, been that way for years, but yes, the low end. Bonds coming down. Inflation would do that, but also, okay, there's very little bid for safety there. And then defensive equities, you can see have really been coming down to what's kind of an all-time low. So this says the same thing. It's like, okay, if something goes wrong, it'll be risky. Everyone's in the pool, but it doesn't say anything about timing at all. And it's strongly advised against using that as timing. So Russell 1000 value, this is where I just want to highlight, like, everyone's talking about AI, tech, NVIDIA, Micron, all these growth darlings and tech darlings. The rest of the market's doing great too. It's financials, healthcare just finally broke out, and I messed around with a little bit. I wanted to be able to pull this in. So this is my charting software where I can. So this is just the NASDAQ. But, oops, sorry about that. This is financials. It's a good looking chart. This is healthcare. And that's industrials. These obviously all look great. And I just want to highlight that, this has nothing to do with AI. It's differentiate. What did I just do? There we go. Good. So non-tech sectors and components of the Russell 1000 value. And this is very key reasons of why I'm still broadly bullish. It's just about everywhere I look, things look good. And that is the case. Russell 1000 growth, as I've said for a few weeks now, we're getting rotation out of some of these momentum darlings that are up 1,000, 2,000, 1,500% in a year. And yeah, people want to take profits. But when you get these large rips, probably should pull that back in a few seconds. Yeah, you're getting this consolidation with everything's hanging in. And when the broad indexes do as well as they are against the backdrop of some of the rotation out of the leaders, that's very healthy for the overall market. So two-way trading while we're up here, but a bullish backdrop. China, I was looking at this. We came in, described this as small support, but I was really looking to see if we could come down another, 5, 6, 7%. And down here, instead, we got about a 5, 6, 7% bounce. I'm okay with that, getting greedy when charts are terrible and I just want to pick a low. I'm happy to let something get away, and some more sideways action here would not surprise me at all. This I've talked about. It's Korea, it's Taiwan, and semiconductors. And of course, it looks very similar to the Russell 1000 growth, the NASDAQ, and some other things, but it overall looks very good. When I put this report together some time ago, it was much less driven by semis. I just wanted to see what ex-US markets looked like, and using this as a proxy, it's not the best proxy. Breadth looks good. Not much more to say. Not much more to say. Breadth looks good. This is I really like this chart. I look at it regularly. Definitely a part of important part of my weekly prep. You know, kind of getting context with what is my mindset coming into the week. But particularly over here in this very important part, we're just rotating. It's alternating. So last week, some of these were down quite a bit. Some I think Qualcomm now was down 20%. Some of these were hit, pretty hard, and they just bounced back. So this is just, a different picture. Healthcare, a little bit of pullback, but not. And my emphasis here is just not a ton of takeaways from me this week. I always look at it, and looking at it in different time frames is a good idea. It's at finviz.com, finviz.com. If anyone wants to look at it, you can do it in different time frames. Very useful chart. Okay, this is not patting myself on the back. This is talking about how much it respects these levels. You can see I put this line in here. We even had to stop there for a little bit, but this is what, $72, I think, and this is 67.50. I want to emphasize these lines have been here so long you can't even see why they're there. They go off the end of the chart, but crude specifically really does seem to respect these lateral levels. And then again, this area up here was drawn here. Let's show you months ago, and I'll show you why. So this is not rocket science. It's just, understanding some of these levels. And this one has come in. It was, big level in here and here. And a lot of these levels get drawn as much as anything off the volume levels here. So when you see this, like, what's this come from? Like, that's just 1 point. It's just a couple points. No, it's right here. This is a lot of trading activity gets in, and this boom comes right there. Look how well it respected it, and then goes right to this level. It's really perfect. Let's see how we open. But I'm just emphasizing that oil trades off of historic price levels really well. That's it. Brent also looks good. We'll see how things go. And I've been spending time on natural gas, which I'm very interested in. This looks much better without the volatility of oil. It's been trading in $20+ ranges. It's almost untradeable, almost. But this is a very constructive thing, and I use that phrase, change in character. Natural gas has been killing people for years. Then it was looking like a change, and it's doing it for times. This happened in January, and we're consolidating this game for 6 months now. I do think the next move is higher, but I've been wrong on a few things lately. It happens. Gold. So I mentioned dollar and how that could be breaking out. And I use the phrase, high level consolidation. That's what we're seeing in equities when you push up high and trade up here. This is the opposite. You've got a declining 50-day. You got the 150 rolling over. Clear downtrend, pretty obvious support level in my opinion. And we tested it, bounced, tested it, smaller bounce, another little test down, sort of sideways. This is the exact opposite of what you want to see. And it looks like, I think if the dollar strengthens a little bit, this could be coming through and we could be heading down to this area. So no position here. I'm for the last year or so, I've been pretty bullish on gold, but I got out a little too early in here, but had a hell of a trade, no complaints. Just leaving that on the table does hurt, but I only took like one stab in here, lost a couple of bucks, and I've been leaving it alone. I may well short it if we get this break. This is a pretty good consolidation. These are my levels. It's the GLD ETF, so it doesn't correspond directly, but yeah, that's my thought there. Bitcoin, I always keep it on here. I know a lot of people are interested, but it just doesn't look like a good trader to me. This also is similar to gold in that, clear downtrend, everything coming down and consolidating at the support. If it breaks through here, I don't trade Bitcoin much, so I probably would not get involved. Energy, they started improving even before the bounce in oil. Valero, which is my proxy for refiners, looks great. The energy sector overall looks good. This is, relatively recent past. This is XOP, exploration